Okay, good afternoon, everyone. This is Sonic here. All right, today it's 14th of February 2023. I'm thinking of starting a technical Tuesday, we name it. All right, I would like to make like every week we have analysis that what might be happening in the market, right? So I hope this video will be very informative to you. And I will try my best to deliver the as high quality contents as possible. Or okay, so if there is anything lacking from my so-called delivery, please bear with me for a time being. I try my best to improve. Okay, so now let's focus onto the topic. All right, so today we have CPI, the data that will be coming out. So if you are not having a date, or if you want something excitement, you can you can wait for Singapore time tonight 9:30 p.m. All right, we have a CPI data that will be coming out. So let a little bit focus on that. So on the CPI on the screen on the left, as you can see, okay, let's talk about the first one first. All right, last month was let me click on this. Last month was around minus 0.1, and they are expecting 0.5. So it was 0.1 and they are expecting 0.5. It is so-called, all right, the market already know that the CPI number should be going back up. All right, I think as far as we can see from all the surrounding, looks like the economy is like back into the full swing because of the it was on the COVID, people are back onto the street because of the those lockdown are easing, right? So we kind of it's almost easily we can predict that the CPI shall go up a lot. All right, CPI shall go up. Of course, will it be a lot or just a little bit? Of course, we have yet to find out. But in my opinion, all right, I think the number will be, will be quite big in my opinion. All right, so they have already forecast, or they have already expected 0.5. I think should be 0.5 or even more in my opinion. So I think the point here is that the CPI data should be quite high. Okay, so I think the economy is back in the full swing. Okay, and apart from that, all right, going forward, right, there's a certain similarity that I'm noticing in the market, and I think you guys should know. Okay, by knowing this, that something might be happening in the future. Of course, nothing is 100%, right? Something might be happening in the future. By knowing in advance, you can take a good chance on it. All right, so of course from there you can, if it's turned out to be true, all right, if it is turned out to be true, of course you can make money out of it. Okay, let me show you what I'm talking about. Okay, stay focused on the left screen. Okay, so you will see a little bit of a line here, line there. Well, let me explain. Okay, let me explain. So I will explain to you what are the lines are, and then I will explain to you where I am talking, or where I will be focusing about. All right, I also did try to do some write up here as well. Okay, so let me explain. So if you can, as you can see on the left chart, right, the black one first. The black lines is basically a S&P index. So it's a it's a stock market in a way. It's a stock index. All right, so black is a stock index. Of course, the higher the better, right, in a way. All right, because it's go down, of course can say it's a market down or market even crash. Okay, so the black line is the S&P. So the blue line is basically is a home price index of US market itself. Okay, so black is S&P, the blue is a US housing index. Okay, how about the orange line? The orange line is an employment rate. So basically, an employment rate, of course, the lower the better. If the economy is not doing well, the orange line will go up, and the market will have a very bad outlook in the market, right? So this is the orange line. And last but not least, the green line. So basically, the green line is a Fed fund rate. So it's a Federal Reserve fund that they every month they set the rate. Okay, so as you already can see from the screen, all right, where we are right now might be quite similar to 2006 September, around that period. Okay, let me explain. Okay, during that time, what really happened? Okay, during the time, okay, you can see, let's start with the let's start with the this blue line first. All right, this is the US home price index. You see the home price index have been going down. All right, it was going down. Yeah, then there was a time that they make a little bit so-called swing back up. All right, so remember the swing back up part first part. Okay, so there's the first one. The second one is a orange line. Orange line is the unemployment rate. Like I mentioned, the lower the better. You see, during that time, the unemployment rate was pretty low. I mean, a lot of people are still having a job, this kind of stuff. So there is not much problem with the employment issue in the US. You see, of course, before they shoot up during they call it GFC, like the Great Financial Crisis. Okay, but before that, all right. So during that time, you see that unemployment rate was actually is a little bit on the downtrend or in the sideways. I mean, they are not uptrend yet. All right. And during that time, and look at the Fed fund rate. You see, Fed fund rate was pretty much, they have been rising pretty nice. You see, the Fed fund rate was rising. What happened? Of course, the home price is going down, yeah? So, okay, so that was one thing. So Fed fund rate was rising, all right? During the time, they kind of stalled for quite a while, all right? Stalled for quite a while. And you see, during the time, what really happened into the black color, which is the stock market at that time. You see, the stock market, in fact, they really grow for quite a number of months. To be precise, or to be give a figure, it is almost around 1 year, from September 2006 to October 2007. So I backtrack here just to so-called summarize again. During the time, what happened? That employment was pretty low, and unemployment was pretty low. That means the jobless rate is pretty low. Okay, I think we call it jobless rate lah. The jobless rate is pretty low. All right. Then the Fed fund rate it was going up and kind of start to on the so-called on the high side. I mean, they are not on the low side, they're on the high side. All right. At the same time, the home price was dropping and it start to pick up. Okay, so 3 point. I repeat again. The first one is the jobless rate was quite low. All right. Then the home price dropped, but they start to pick up. And another thing, the Fed fund rate was pretty high that time, and they are not on the low side. This is a 3 point. So now let's take a look what happened during that time. Before I will explain what might be the similarity. But during the time, what really happened to these three major market that I would like to point out to you. All right, so it's around September 2006 to October 2007. Okay, let's take a look. Let's do some comparison with the gold here. So on your right side, the chart is of course a gold chart. All right, okay. So let's take a look what happened on 2006 September period to 2007 October period. Okay, so we will be talking about, let me just put a vertical line so that everybody can see clearly. All right, 2006 September. All right, so it was here. All right, then another one is around 2007 October. So we will be talking about around here. This is a monthly chart, by the way. So the 1 month is one candle. Yeah, so you can see during that time what really happened to the gold price. The gold price, of course, they have a little bit of dip, but overall the starting point and ending point, the ending point is higher than the starting point. So so you can see the market the gold price seems to rise up during that period. Okay, so this is during this period, Okay, so this is number one. So gold price up. Okay, let's take a look what happened to the oil price as well. Okay, oil price. So same thing, monthly chart, right? Monthly chart. So let's take a look on this oil price, right? Oil price around September. All right, then until 2007 October-ish. All right, so it's somewhere around here. So it's also they also paint the same thing. Of course, they didn't go up immediately. They have a bit of go lower, and they have a kind of like they form the bottom, but most importantly, the ending is higher than the starting point. So put it this way, if we can loosely translate, the oil price also go up during that period. All right, so go up, oil price up. All right, so let's talk about what happened to US dollars, right, during that period. There's also a monthly chart. All right, so back to here, 2006. All right, 2006. Let me just 2006. The vertical line again is from September of 2006, all right, and until October of 2007. All right, you see what happened? It's the same thing, right? So of course, this is opposite for this this scenario. So you see, during this period, gold is up, all right, oil is up, all right, and how about US dollars? US dollar is down. So okay, so during this period, so let's talk about where might be right now. Okay, just have a final recap. During that period, what happened? The jobless rate go lower, still on the low side. All right. Then the oil price was the housing index is dropping, but they kind of bring back up. And another thing is the Fed fund rate was rising all the way, and during that time they kind of peak out. So that means they go flat line. Okay, this 3 point now. So now I move forward already. So let's talk about where we are right now. Okay, I repeat again. Okay, how about the jobless rate? Let's take a look on the jobless rate. You see, jobless rate is on the lower end. All right, so likely they are going to stay down here for quite some time. So jobless rate is quite similar to 2006 again. Then how about the housing price? You can see the housing price is also picking back up. Okay, so it's similar, similarity is there. And how about the Fed fund rate? The Fed fund rate also same thing. They have been rising, and most likely they might be going sideways, or they definitely won't be going up. That's right, they definitely won't be going down immediately anytime soon. So we might be a bit up or sideways. So from this three so-called information alone, first thing, jobless rate is stay on the downside. I mean, their jobless rate is pretty high during the COVID time. You see, they go down and they are really almost on the down, so-called lower end. Jobless rate is at the lower end, and you see the housing rate also. Previously they were dropping, then now they are recovering right now. And second, the third thing, the Fed fund rate is also going up along the way, and they are now sort of like either flat or they are only about to go up. Go down is very unlikely. So do you see the similarity now? The so-called the period that I just mentioned between the 2006 September and 2007 October. So a lot of people are talking that, oh, the stock market is about to crash, all this kind of stuff, right? I think it is not really the case in my opinion. All right. I think it's not really a case in my opinion. So I think the stock market is about to go a lot higher in my opinion. Okay, how long do we have? Okay, during that example, we have around 1 year. All right. Okay, so we just give some discount, maybe at least two quarter. We are talking about maybe 6 months or 8 months first. Okay, we don't give 1 full years, but during that time, I think moving forward in the next 3 to 6 months minimum, I think the stock market will do a lot better than where we are right now. So when you hear people talk about the economy is crashing, all those things, you need to ask them, okay, you are based on what? For us, we try our best to look at the history, because history tend to repeat itself. And we have a lot of comparison. We have a lot of input 1, input 2, input 3. Then we will try to, see is there any big variation or not. So as you already know, I have measured 3 of them, and almost all of them pointing to the potential same conclusion. All right, guys. So thank you very much. I will try my best to make my video short and so-called as good content as possible. Thank you very much. If you I will upload this in my YouTube. Okay, I have not really touched for YouTube for so long. If I will upload it on my YouTube. Please do me a favor. You can like, you can subscribe to my channel. I will do my best to bring content as timely as possible. Please like, subscribe, and of course, if you think it is good, you can share it into your Facebook and stuff like that. All right. At the same time, I also have this Twitter. All right, Twitter. You can follow me on Twitter. I also have a Telegram channel. You can follow me on Telegram, where I post my trading analysis almost every day. All right, guys. Thank you very much, and please support me on that. All right. So I see you guys again. Bye for now.